Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 12th. Mike Boutros here with you on the mic. Hey, Jaya, great to see you. Good morning, sir. Robert, Peter, Mark's in the house. Marco's in the house. Kamal, Kieran, Jaya, great to see you guys this morning. So, are you getting faked out yet? Some of these moves. Hey, Aurelian, great to see you too. Some of these moves, I mean, man, the dollar. So look, we'll talk about all the dollar crosses today. The index and the euro both turning from levels we were noting. Um, what do you do? Just as you're giving up on the dollar long, looks like it's starting to respond to some resistance. So want to tread lightly here. Don't want anyone to get faked out, but there are opportunities across the majors that we'll be looking at. So on the menu for today, DXY. Obviously, euro, sterling, Aussie from last night. Crude levels with a big reversal through resistance, testing downslope resistance at these levels. Kiwi sitting at support. We'll hit euro. Kiwi hasn't been a play yet this week. Gold with a nice little recovery. I know you're looking at that, Robert. I'd be cautious. Like I said, something about the recovery just doesn't have me, all up on the gold long just yet. So we'll take a look at those levels. Peter, I got you on the SPX. And any other questions or trade setups, guys, feel free to throw them on the message board at any time. I don't have Dollar Cat on there. Robert, is that for you? Dollar Cat, let me add that one too. Okay. Okay, so let's jump right in. Here's where we stand. So before we go over the euro, here's DXY, and this is obviously, I'm just going to take a top down real quick, but you guys have all seen these charts before. So here's the weekly chart that we've been following on the DXY. We talked yesterday in the webinar about the inflection. We've been getting off that 38.2% line of the broader pitchfork. We've been following off the highs, and certainly the failure to close below it on a weekly standpoint gave us this rebound. We talked about the fact that the broader picture, okay, still highlights major resistance at 97.42 all the way up to 97.87. Again, ideally we don't stretch that high, but real basic stuff, guys. Former slope resistance, turn support, turn resistance, turn resistance. That's there. Former channel support, broken, add resistance. That's there. The high week close for 2018, 97.42. That's there, right? What do you do? So what do you do? You have to sit. You have to sit still here. I still think maybe I'm being stubborn. Maybe I'm capitulating. I still think you get a little bit more of an exhaustion. You probably press a little bit higher, but I don't want to be looking to load up on long positions from these levels. Here's DXY on the daily chart. Okay, real objective stuff. Basic trendline support. You can use a couple of different, obviously, pinpoints on this reference point, but the high that you made back in December sees the cleanest amount of touches besides that spike you made on the 14th. That turned right ahead of where we just kind of maxed out. Here's your monthly and yearly opening range highs. You closed above it yesterday. Here's an exhaustion and pullback. This thing could get as deep as 96.70, even back to this slope line and fake out a whole lot of people before you even start to shift the broader focus to the downside. That's why I'm so concerned. Even if this pulls all the way back to former slope and then rips again, it would still be within the confines of like a basic range break. So we have to tread lightly here. We have to tread lightly here. Obviously, you might have heard some news in overnight trade that why am I not able to? There we go. The trade deal, or the deal rather, that they're coming up here in the U.S. to avert another government shutdown. That seems to have markets on a pretty firm footing here ahead of the U.S. Open. But here's DXY on the intraday. Okay, this is the same levels that we've been looking at. That real tight channel. Can't remember when the last update was on DXY. Couldn't have been too long ago. Right here. Okay, nearly the same channel. Okay, what we did is we shifted from these two lows to these two lows, the subsequent lows that you made higher from here, right? But you can see it's just been a straight shot to the upside. 7.6 retracement got taken out. 97.14 is what we're looking at now, past these highs. So we're all up here, right? Big region. Big region. So look, if we break the downside of this, weekly open support comes in just below that 618. That's like 96.60s. If we break that, sure. Okay. At that point, you have a little bit more conviction. You have a little bit more evidence on your side for the dollar pullback that we've been looking for. But again, I really caution tread lightly here. I'm really actually, I woke up with mixed feelings because I was really tempted to jump into a euro short. Any questions on this? Onto a euro long, rather. Any questions on DXY here before we move off? Levels are pretty clear, unchanged. A breach of this high, you're still looking for a stretch towards 97.42. It's over. But from here, if we break channel support, 96.60, 96.69 weekly open, again, that 618 basic slope, that's the break I'm looking for to give me a little bit more of a conviction turn to the downside. And again, just a basic decent pivot in price, irrespective. Okay, so that's DXY. Here's Euro. And obviously, Euro 113 was the name of the game. I just want to highlight this chart once more as we will be looking at this with great intent heading into the close of the week. Okay, here's what the Euro chart looked like. Again, the weekly chart as we opened, talking about 113. Okay, if we close the week back above 113, guys, there's nothing different from this week of November 12th, no difference from this week of November 26th, no difference from this week of December 10th. All of those weeks we dribbled way below 13 and closed the session or the week higher. So this is why on the initial break, we want to be very careful. Everyone got really super bearish yesterday. All of a sudden, you see that SSI or sentiment index that we look at for broader retail positioning has extreme skewed on the long side. Again, that's not necessarily a bullish thing, but the signals on the bearish side are kind of there already. Price needs to close the week below 113. In the meantime, what do we do? Right? In the meantime, what do we do? Here's what it looked like last night. And we highlighted 112.67. That was a level that we had talked about into the open of the week as a downside target for the break. And it converged on basic slope support. Now, a newly added pitchfork. I added this yesterday. I should take a step back. The thing that gave me a little bit more conviction was that the 50 line, support, the break was instant resistance. What was the next level down? The median line. That's exactly where we were trading last night. So again, it was one of those calls where like, man, do you fight? Do you try to catch this falling knife and go long Euro? I was very tempted to do so. And, although Euro has moved higher since, I'm glad I didn't because I would have gotten stopped out, guys. Here's Euro, right? If I had taken an entry against this, my stop wouldn't have been too far below 1267. And this thing dropped as low as 1258. I probably would have gotten stopped out there and then it ripped higher. So there's an opportunity heading into the open of Europe, okay, with that spike, a reversal candle lower into support. That's an exhaustion trade, right? Anything with a stop against that low would have given me a 15, 20 pip stop. You're basically looking for 113. That's the December low day close. 113.15 is the weekly open. And then the weekly opening range converges on slope right here. So these levels are all stacked up, guys. I really, I don't like to give them to you so stacked up, but levels to be mindful of because we're being very nimble here if you're trading anything on the long side here. It's 1330 is going to give you the validation for, the break higher or the reversal play to the upside. Marco says, I took it and I did get stopped out. Yeah, Marco, man, that could have been me or you. I was a hairline trigger from pulling on it, but I just, again, the decline has been just insane, guys. And then, yesterday we talked about this too. The decline that you saw in the Euro, that's sort of a 5-6 day decline now, consecutive days. A look back in history or historically, that's not necessarily excessively bullish. We went over this yesterday in the webinar. The last 3 times that we saw that decline, 2 out of the 3 times you saw a pause of sideways to higher for a couple of days before it inevitably moved lower, right? So I'm very cautious here. I think 1267 was a great level to look at. We're checking channel resistance. If you're holding anything on the reversal, maybe lighten the load here. I really would love to see 113 on a tag, but it's really 1330 that would give you any type of conviction to play the long. Guys, this has broken not only the January range lows, but it's broken the December low day close. It's broken slope support on the daily chart. Unless we recover back above 113 on a closed basis, it's bearish, right? It's bearish. So we have to stay as objective as possible. Puja, I was tempted at 1264 after the euro low, but only your words, 1290 is critical to the long side, stopped me. I mean, the whole thing was that the trade would have been into 1290, Puja. So if you took the 1267 scalp there, you're basically looking to take a little bit off right here, stop at break even, because 1290 was pretty big for me. I've removed it because, by the way, what Pooja's talking about, guys, is the 786 retracement. I know exactly the level she's talking about. 1291. And the reason I thought that was going to be a much more significant level, or it was for us on the way down, was not just because of the fib respect there, but also because it was the exact stretch low for January. So kind of objectively, it's your monthly range lows for the previous month. So yeah, 1290 was big for me, Pooja, but that was for on the way down, right? That's the level that I needed to clear on a closed basis to validate the breakdown. And we got it. So I don't want to stress 1290 anymore. Now it's about 113 again. Okay, and 113.30 is what would validate for me an objective break of the weekly opening range highs, slope resistance. That would shift the focus higher. Make sense? D, great to see you. Pooja says, yes, thanks. You got it. So let's see how this pans out. I don't want to get too aggressive on it. I'm still favoring, some sort of pullback here, but I want to see this thing hold actually for some sideways to higher action in euro. We'll see if it gives us anything. Any questions on this pair? No change to any of those levels. That's number one. Number two. Number three, sterling. A similar scenario in that yesterday, it was coming into a near-term area of support. That level is defined by the 50% retracement, nothing major. But you can see objectively, again, objectivity, price, pivot, price, acceleration on both breaks, on both ends of that, from the underside, or from the top side and from the underside. Support, support, converges on basic channel or slope support. So 28.28 was the level that we talked about. I was kind of looking for a dip into that to see if you can kind of get some legs underneath pound just for a little bit of recovery. And you got it pretty darn close. The low registered at 28.31, 4 pips off, 3 pips off. But there's the bounce. Again, one that you're trading as a rebound off of downtrend support. Nimble on the way up. You're just playing this as a recovery. I wouldn't get too aggressive on looking for a stretch into 29.40 on this initial stretch. Okay, you do have some data from the UK later this week. So you want to keep that in mind. Whoops, sorry about that, guys. What's the consumer price index? Wednesday, that's tomorrow. Okay, and it's supposed to come in actually a tad weaker. Long story short, you have all this Brexit stuff, so just be careful. There's another vote on tap as well. Initial resistance, unfortunately, I still don't have it until we get the weekly open. That's 29.40. Bearish invalidation 130. A break beyond this, 27.50 is kind of like what you're looking for. That's the yearly open. 27.35 is the 618. Real clean levels. It's just if this is gonna be just a break of resistance and a hold, this is what I want to see hold. Here's sterling on the daily chart. I think I highlighted this yesterday. Here we go. Right? So you have basic slope resistance. This is the pitchfork off last year's highs. Right? We saw acceleration. The 50% retracement we just talked about on the intraday chart, yeah, it converges on that former slope resistance, should be support. So if we're gonna get a rebound, it's like too clean, but this is where I'd want to see it. Now, again, we got to clear, like 130s to really validate that we're getting some momentum to the upside here. But that's the initial stretch, 28.20. If we break below that, the big level of support is 27.54 and 27.35. That's your next major key level. Right now, I'm treating this just as a near-term recovery within the downtrend. Questions? In fact, you could put a soft target here on the daily chart, right around that 100-day moving average. Basically, that's resistance right around now. Okay, that is sterling. Number 3. Also from last night's update, Aussie. Well, Aussie's boring as hell right now. I have nothing to do with this thing. Look, reversal off major resistance on the weekly chart. We talked about that. The low day close comes in at 70.50. The daily chart, okay, has 70.40 as, basically the yearly open. And then again, 70.20, 70.40 was stretch lows we made in October. Again, the low day close, 70.20. I want to see it drop into this region. That's all I want to do. I want to see a reaction off this. That's where I want to kind of assess where I go from here on Aussie. Here's the intraday chart, again highlighting both of those levels. It's just not done anything. It hasn't dropped into that level. The opening range for the week is pitiful. We're talking about 71.08 into 70.50s, or about 60 pip range so far. So guys, on this one, again, a bullet to my head. I still think it kind of finds some sort of legs under it near term on the back of this drop, but we're not coming off support. The only thing that I would consider, and I was kind of looking at this before the webinar, 75% retracement or 75% slope line added to this pitchfork does find us at support on both of these legs, right? So if we remove the 50 for the sake of clarity, and you think to yourself, well, Mike, if I kind of look at this in the way that we typically do, as kind of an objective look, it looks like you're heading slope support, right? It looks like you're making divergence in momentum with price action with a lower low, the oscillator with a higher low. Doesn't that mean we should be looking for a recovery? And I think that's kind of the play I'm talking about. But for me, I would have liked a stronger support confluence to try to fight a drop like this. You know what I mean? Dollar, like I said, has just been ripping. Ideal scenario, this thing kind of just washes out once more, takes it into 70, 70-20, this region here, on which I'd looked for a lot more of a conviction sort of exhaustion, possible entry for the long side. Till that happens, or if we get a break of the median line, more power to you. Let's take it up to the upper parallel, sure. But from these levels, guys, we're kind of mid-range. I'm just a little bit skittish here on Aussie. So take it for what it's worth. I wish I had a little bit more conviction for you. Again, the median line for the uptrend, or at least for the lows that we made to start off the year, and the low week close. Here's Aussie, right? The low week close on the weekly chart. Right here is 71.14. So if we can get through this little region, sure, maybe that will validate a little bit more of a breakout towards 71.70, get a tag of the 100-day moving average. But it's either a break above this to validate the reversal higher, a drop into here to offer entries. If you're looking to play the drop beyond this, if you see failure here, that would be sort of the onset for that last drop towards support. But from this level right now, I'm kind of taking a neutral stance here on Aussie. Okay, so nothing there so far. That's number 4. I guess before we jump into the commodities, let's go ahead and jump across into some of these commodity currencies. So that was Aussie. Let's hit Kiwi. Who was asking about Kiwi earlier? Kiwi's at support. Okay, this is what I'm looking at. 100-day moving average, 618 retracement, 67.22 is the level that we had talked about here earlier in the week. Here's Kiwi, and here's that key level of support. 67.22, 67.21. Like I said, the 618 off the low, 100-day moving average. Really nice level of which this thing should find some sort of support after a 5-day decline. Now, does that mean that we should automatically be playing the long? There's not much in it so far. I thought it was worth it just kind of take a shot here as we open up the session, but we'll go break even real quick on this one. Okay, it's just that the level is holding really clean. 67.22. Bottom line, that's exactly where the wicks even found a low. The low actual tick registered at 67.20. Grant me a pip allowance. But you get the picture. Um, Ultimately, like I said with the Aussie, I still think this does sort of wash out. Okay, it gets a deeper cut, maybe 67, maybe even that confluence region there. Just looks too simple. But from this level, it's a pretty nice confluence. It's a pretty nice confluence. So we'll see if we can't get some sort of upside play here. Initial support, or initial resistance, I should say rather, excuse me. Weekly open, it's like right there, 67.40. Obviously, we've been bobbling below that all night long. 618 from which low, Robert? The 618, Robert, is... Whoops. I feel like there was some sort of update to TradingView. I'm a little off here. With some of my quick keys. Did something move around here? Anyway, it's the 618 of the yearly range of the yearly range. So from the January low to the high that we registered on February 1st. That's the 618 retracement, converges right on with that 100-day moving average. Flash crash. Yep, you got it. I hate using those lows, but hey, the low registered off of a support slope. It's pointless to ignore it. So we have to just keep that in mind. And it's the yearly range at this point. So let's see if Kiwi can't get a bounce. Larger picture, still bearish, essentially below 67.60s, the 100-day moving average slope. You have inflection on both sides of these. So I'm still, of the mindset that this thing does head lower. I just think if you're going to get some sort of recovery, this would be a nice level to do so. Any questions on Kiwi? Got to stretch that, by the way. Quick adjustment to those levels, guys, to take the new low that we just made last night. Again, I don't think we get up here, guys. This is just sort of your breakout targets if you do break the weekly opening range. The play for me is just kind of back towards the 200-day moving average, back towards the weekly opening range highs to see if you can't get failure there again. All right, that is Kiwi number 5. Euro Kiwi, really quick, and then we'll jump into CAD number 6. This is one that we highlighted into the open of the weekend as well. There's nothing going on here. I'll just show you the chart real quick. This thing is just setting a weekly opening range, back and forth, back and forth. Nothing really to do just yet. The only thing that we've added here, I think is in the report. I think I took the picture too early. Is the 100% extension from the decline off the monthly highs. That's 67.25 and offering support here into the start of the week. So really clean opening range. This is all still just the stretch into the Sunday Asia Open. We've still held just that singular range 2 days into the week. So ideal scenario, you get a move towards the lower parallels to get long. If it breaks to the upside, again, I'm not going to chase it, but you'd be looking higher towards 68, 65, and last year's open, essentially at the 69 handle. Bullish inval for this trade is still, the entries to continue favoring the long side immediately are here, 67, but bullish inval is down at 66.44. The only thing that would turn me aggressively bearish on the pair would be a break below that. Form a slope resistance up there. Now support, current operative slope support. I know we broke, but again, the pivot on both sides and the fact that we turned right ahead of the upper parallel still has me using this slope for now. Okay. Any questions on Euro Kiwi? Interesting pair. It's number 6. Dollar CAD. Number 7. So, Robert, remind me again, you're in dollar CAD. Are you in this short? What side are you on this trade? Here's my take on this. I like how it turned. So the levels that we looked at, I'm not sure if this was in the webinar or on the updates from last week. Looks like 132.32. 132 is going to be that key support still. So both of these levels, I would love to see tag as support. First thing, this is just Friday's low, by the way, just as so you know what these levels are. This is just Friday's low, and then the 236 And the 100-day moving average, the 100 moved. So let's make sure we have that on the right levels. 100's here now. There you go. So watch those two levels of support. He says, I'm sure triangle break. So triangle break. Talk about like a real near-term triangle break right here. Yeah, that makes sense. Here's like the 60-minute chart. Not the most convincing. I don't like when the angle is so acute like this, but the upper parallel definitely looks pretty good. That's really nice. So yeah, I mean, you could judge this as a triangle break. Again, I like it when the slope is not quite as aggressive, as sharp, but just watch the lateral level. So this 618 is the 618 of that decline from the January highs, the late January high, I should say. And then you have slope here as well. So, I'll tell you what, just below 33 is a pretty big level right here. So what you're looking at here, guys, is the hourly reversal from the weekly high. That gives you like 32.97. The reason it's actually pretty interesting to me is because the subsequent hourly reversal off the subsequent high closed right about those levels as well. That close was 32.98. Okay, so you're basically looking at 32.98, 32.97 as sort of a pretty significant pivot in price. Also note that was the Sunday Monday advance high and the pivot that we made back last week here. So watch that level. Not sure where you're short from. I doubt that you're short from quite that high, Pete, or Robert rather, but that's my near-term level of resistance I would need to see hold if this is going to work. Anything beyond 32, I think at this point is still a little aggressive. Okay, 32.10, 32.17. Remember, that's the 100-day 236. That's kind of where I want to see this thing settle first. We'll assess from there if we get there what kind of move dollar CAD has in store. Remember, dollar CAD on the weekly chart is just, this thing is wicked, right? We turned pips ahead of a huge region of support. Major confluence. You don't get these confluence regions quite this often of this magnitude. Slope 100, 200, 38.2. I mean, everything you name it. So does the rebound, does it fizzle out just from here and move lower? I don't know. I would love to see just another tag of this support line though. So I'm with you on the short. Rob, if I was in a position last night, that's probably the position I would have taken if I was on dollar CAD. But watch this level here. Again, maybe a good area to take reduce lower position just a tad. 32.98 needs to hold on any intraday spike for this to remain bearish. Cheers, Robert. You're more than welcome, sir. That's dollar CAD. And again, this one, Rob, the thing you got going for you, man, is that this is objective as can be with the fact that you've just made a simple weekly opening range. Here's your weekly open. You test the weekly opening range low. You make a high. You test the high. If this is legit, price should start to slip into the U.S. Open. If we pull back up and we close and we settle above 32.60s into the U.S. Open, Europe closes, you start to move higher. At that point, it was a test of the opening range low that failed. So there's a couple ways you can just look at this heading into New York trade session. All right, that is dollar CAD number 7. And that clears all the crosses. Any other crosses that you guys want to cover? Robert says agreed. Cheers, Rob. Any other trades that you guys want to cover, feel free. I'm going to jump into the commodities and SPX if there's no objections. dollar yen. We can look at dollar yen, sure. I'm not trading it, but here's what it looks like. And the only reason I want to bring this up is because the daily chart is pretty interesting. So remember that slope we talked about yesterday in the webinar? This is slope resistance, parallel with support, 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 break, acceleration. A parallel here saw support for, I don't know, 2 days. We're testing that now. The level I wanted to see tag was right here. 618 retracement of the entire decline from October converges on basic slope support. This is this parallel. Okay, extrapolated to the high that you made in January. That's like 110.77. We peaked at 110.65. So again, I don't want to get too stubborn here, but that was my sweet spot. I'm not really looking to mess with dollar yen though, but just note that we're heading into 60 in momentum. Price has a little bit more to go. Again, 1077 would be sweet. Until that happens, I will be a market watcher of dollar yen. Not getting involved in this one. Okay, just a quick look at dollar yen. That's number 8. Let's jot that down. Okay. Gold. So, Rob, we were talking about gold before the webinar, right? Here's the deal. So on an objective approach, before anyone even says anything, right at the gold weekly chart, we've been talking about 2 levels that matter for the last 2 weeks, and those are still the 2 levels that we need to watch the weekly close. 1302 is support, 1322 is resistance. Those are that $20 range is the world for gold as we speak into the close of the week. We need to see a weekly close out of that range to validate a move. Bullish invalidation for the broader trade still here. Okay, it slips still about 1290, right? That convergence of former slope, well, I guess both of them are former slope resistance for upslope and downslope. Okay, bigger picture stuff. Next upside target's 1350. That's weekly. Daily looks like this. Nice ascending channel formation. Here's your monthly open. Monthly open resistance also now at 1321. 1322 is the level we're looking at. That's still resistance. 1302, that's still support. Again, 1290 right around here. That's going to be bullish inval. Okay, daily chart, right? Here's my problem. On the intraday. Oh, it's already started to turn. Rob, I hope you saw this as we were doing the webinar. Here's my problem. As I was saying, if it breaks the objective weekly opening range high, I think that would be the go-ahead. But look where it turned. As we were doing this webinar, I probably should have talked about this a little bit earlier. Look where it turned. And not only did it turn from the objective weekly opening range highs, it also made an outside candle right off that level. It wasn't a reversal candle, but an outside hourly right here, moving lower. So on this one, again, objective, weekly opening range is in play. As I said, I kind of do think you get the stab lower for gold before you inevitably turn higher. The broader picture for me is still bullish gold. Intraday, you're trading near the range highs, near the weekly range highs. I still think you risk another pullback towards 13. Hey, Robert, dust yourself off. Dust yourself off. Ain't nothing, okay? Just make sure on some of these trades that you're throwing out, we're not chasing the move, okay? If you didn't get long gold last, or I guess yesterday, trying to play the breakout today would have been a tough call. You might have seen the break of this trend line and been like, oh, well, this looks like a breakout. I want to get long. You have to be very mindful of those moves, okay? Because first of all, a couple things to note. A, this slope is a simple 2-point touch. Every trend line is speculative on 2, confirmed on 3, right? Because any 2 points can make a trend line. I could sit there and start chasing trend lines that don't exist. So because this is only a 2-point touch, you never want to try to play that breakout as if it's going to be a major move. So live and learn. I don't want you to get too hard on yourself, Rob. It's ain't nothing. We'll see this. We'll see this come back again. I think the longer picture is still going to be bullish for us on gold, but from here, risk possibly another pullback. Actually, is there any slope on this? Bear with me one sec, guys. Let me see what this looks like. I didn't even need to change that. So that's still the 75% line. Hmm. All right, you know what? Let's clean this up. Bear with me one sec, guys. That's resistance at the weekly opening range highs at this point. And the Thursday's low. That's still major support down there at 113. Yeah, I'll work with this now. I'll work with this for now. A couple of point touches, you know. Here's the top 75% line. Look at that. It's the exact weekly opening range high. Here's again, obviously the lower 75% line, pretty decent support. Here's the median line, pretty decent resistance. So might be onto something here if 1307 is able to hold support. But till it does, we're just in a weekly opening range, plain and simple. Questions, comments, concerns on gold? It's number 9, number 10, crude. So this thing turned around and ripped last night. Here's the update that we wrote on crude. So remember we highlighted this pitchfork last week as we were heading into its support. We said, man, this is pretty big here at 53, 52.73. If we get below that, you're looking for 52.50, which is going to be the lower 50 line. It was an estimate. It got a little bit deeper than that. And then 50.61 is your next major level of a basic Fibonacci support and slope. Last night we ripped. Bearish invalidation, or the near-term resistance 53, bearish invalidation at 53.80. We're basically testing that now. Look, we ripped right through resistance. Here's the 2017 open. Again, that median line, the upper side, that's the upper 50 line or the 75% line, whatever you want to call it. Converging, we're breaking through that right now. So listen, all things held constant, this thing could turn, or this could be the turn. Let me say that for crude higher. Here's the bigger picture. It's all about this level for me near term. You have the yearly open, 2017. You have this month's open at 53.98. Okay, that's like right here. And you have that slope. Okay, if this is just a recovery and this is going to fail, this would be a nice spot. If it breaches and closes the day above, man, I mean, you kind of want to see this formation break, but the resumption trade, remember, crude on the weekly charts, guys, we're coming from some pretty big levels, right? Remember our yearly forecast, 55.55 was the first level. Next level, still 59.60. I do think we get that clip this year. So, I mean, you don't want to get aggressive on this until we clear this level, but certainly, you know, all things held constant, we're watching this rebound with great interest to see if we're able to make any headway above 55. Questions, comments on crude or gold, for that matter? Now, keep in mind there's going to be a lot of event risk, headline-driven event risk, and certainly the fact that the government shutdown has been averted, as it seems, based on this morning's news and such. It seems like you're going to get some sort of more positive risk sentiment moving into the U.S. Open. So things do look pretty good here for crude. That's number 10. SPX, number 11. Pete, here's what I'm looking at with that. Actually, I haven't taken a look this morning, so let's get a quick update here. 200-day moving average, still right on point there, around 27.44. Oops. Okay, so Pete, I'm still looking at the same level. Okay, it's 27.45, 27.36. Okay, the 10-point range. Um, I wouldn't stress this slope, although it has offered some pretty decent pivots on both sides that converges there. But also the fact that, again, 200-day moving average, major pivot in price. Um, I'd still be looking for resistance there. I'm keeping hold of my long position in gold from last week, still targeting 1340s. We'll keep under review. Yeah, if you're holding a longer term position, Kieran, make sure that you're keeping guys your positioning in mind when you're talking to me or when you're talking to Jamie. Our outlooks are very different on a time horizon, so make sure that we're keeping that in mind with what kind of trading you're trying to do. But um, the longer term picture, I like it for gold. So I don't want to take a segue back, but watch for this SPX. Peter says resistance 27.45. Yeah, I would say 27.45 is like a breakout zone, Peter. If we clear 27.45, there's nothing to stop 28, in my humble opinion. Um, and again, don't take my word for anything. Look back in price. Every time we've come into this region, it's held as support. You've seen 28. Every time you've come into this region, it's broken as resistance. It's tagged 128. Broken resistance, tagged 128. There's not much middle ground here in this range between 28 and 27.45. So I tend to look at price responses like that very, very often. So yeah, for me, it's going to be a turn and burn section. If we get here and it fails, maybe you get the drop towards 26,671 rather. But all things held constant, Pete, risk sentiment seems positive with all this news that's coming out. You know what I mean? Unless something really dramatic happens, with Brexit or the tariff deals, and they kind of throw their hands up in the air and they just accept the fact that the tariffs will go up as we open up March trade. I don't know. I think it would take something. Things look pretty positive here, although momentum kind of looks a little tired too. So play the levels. If you're holding longs, 27.45, 27.37, that's a level of resistance. Adjust accordingly. If you get the breakout from there, like I said, there's room. And again, an upside break of an ascending channel oftentimes will be the sharpest part of the ascent. Okay, so just know that's what the risk at 27.45. If it's going to fail, that's going to be the level to happen. He says, great, thank you. Hey, good job, Pete. Nice trading, man. Well done. Keep it up. All right, and that is number 11. We flew through those today, guys. Any questions or trade setups you guys want to review? Or anything you want to go back and take another look at, let me know. And throw it on the message board when you get a chance. Quick reminder, we'll be back here on Valentine's Day on Thursday. Kieran says crude, please. Hey, you got it? So for crude, it's going to be all about this close today. Remember, monthly open resistance is 89, 53.89. So if we get through monthly open resistance on a closed basis after a rebound like this, man, that would be screaming. Look for a spike, for a push higher even. Whew. There's a 618 right at 54. Also monthly open. Yeah, watch resistance here. Watch resistance here. Drop that. Whoop. Here, Kieran, feel free to take a picture of that. That's sort of the updated targets there. But this is big, 54, 53.98, monthly open, 618, slope resistance. Watch how this 4 hour, 2 hour candle even closes in this region. Yep, I was looking for the pullback here. So I mean, I don't want to necessarily encourage a short from here, but if you're holding longs, Kieran, that's my bigger point. Um, this is where you want to kind of like take a look at what happens into the U.S. Open. This is big. This is big. Objective stuff again. Monthly open 618. Okay. Any other questions? We'll go ahead and wrap it up there. Thanks for everyone in the room. Again, we'll be back on Valentine's Day on Thursday, and then I have a big weekend ahead of me. So I will see you guys then. As far as data is concerned, don't forget you do have the RBNZ interest rate decision on tap later tonight. So with the Kiwi sitting at support, it's one of the reasons I haven't done anything on this, and or actually I'm sitting in this one, but that's one of the reasons why I think you want to bail on this or you want to kind of reduce position if you're in the money heading into RBNZ. Because if you get that final washout towards 67, I'm not going to be in that trade. I'll be stopped out by then. So 67.40, 67.58 is that 200. Look for a reaction there. Ultimately, if it washes out below 67, we're in for a big problem here in Kiwi. But we do have the RBNZ interest rate decision on tap later tonight. All right, guys, best of luck trading, and I will see you on Thursday. Cheers.